Hey, good afternoon, guys. Your old buddy Tim, back again for another episode of Riding and Ranting. That's right, the show that does not require G's in any of the words. I hope you're having a fantastic day. Another beautiful spring/summer day in Alabama. On my way back from doing a closing, putting some happy clients into a happy little house. Always love it when things come together and clients are happy with both sides of the deal. One of the things that came up in closing that I want to talk about today is PMI. PMI is private mortgage insurance. It is a form of insurance that some lenders charge to folks who do not have a certain amount of money to put down. For example, conventional lenders, if you don't put down 20%, many times they will charge you PMI. And PMI, like all insurance, it's a monthly premium that you pay. Now, why should you have to pay PMI if you don't have 20% down? Well, you've got to remember the key word there is insurance. And insurance, boys and girls, in case you don't know, basically means you are paying someone else to assume the risk. In this case, you are paying someone else to assume the risk that you may not fulfill your obligations on the mortgage. So there's a private mortgage insurance basically that protects the lender in the event that you may default on the loan. God forbid. I know you'd never let that happen, but shit happens, right? So that's what it is. It is insurance that is charged by the lending company, basically to cover their assets, if you will. It is just their way of making sure that you are going to be able to pay the mortgage. Now, if you put down the 20%, you don't have to worry about the PMI. And the good news is there is a point, or there will come a point, when you can have the PMI premiums removed from the loan. Typically that happens when you reach a certain amount of equity, or you have the loan paid down a certain amount. The lender will give you the option maybe of getting that PMI removed. So that's what it is. Insurance, again, is where you pay someone else to assume the risk, and that's what you're doing with PMI. You are paying someone, a company, to assume the risk for the mortgage on the property. So not all loans have PMI. There are different loans. Different lenders will do different things. So when you are thinking about getting a loan, and we're going to talk about this in another video, one of the things you have to keep in mind is how much money do you have to put down. And if you don't have 20% on a conventional loan, chances are you're gonna pay PMI, and PMI can add a nice chunk to your payments. But again, I don't give financial advice. I'm not a loan officer or an attorney. I don't play one on TV. I'm just a guy who rides and rants and drives and drones. And I look really good doing it.